Hello there. The aim of this video analysis is to take a look at the economic calendar. What are the factors behind these markets, these market movements that we see every day? And this is the Forex dashboard, but the vast majority of binary options products or financial products are based on these FX currency pairs. As a matter of fact, because the US dollar is the world's reserve currency and the financial system being based on the Bretton Woods system, everything is interconnected. You might say that you end up trading equities in reality, or gold, or not really currencies, but in reality everything interconnected. Even if you look the other day when the gold market dipped suddenly, and it triggered automatically a higher move in the US dollar. So while you may end up trading a binary options based on the dollar, on gold, in reality you trade these financial markets. Now, what moves these financial markets? There are two things to look for. Number one is to make a technical analysis. What does it mean? A technical analysis, it means that you end up buying or selling, or buying an option, a call option or a put option, based on a technical indicator. You simply go and take a technical indicator from here, either a trend indicator or an oscillator. You apply it on the chart, you have a strategy, so you buy a call or a put option. Or simply you may trade with Elliott Wave's theory, with the gun theory. There are plenty of technical analysis, trading theories, wonderful ones. However, besides technical analysis, fundamental analysis plays an important role. What does it mean to trade fundamentally? Well, look at these currency pairs that you have here. They are coupled, or the currencies are coupled one by one, the euro and the US dollar. It moves based on the differences between the Eurozone economies and the United States economy. The US dollar and Canadian dollar, it moves based on the differences between the US dollar and the Canadian dollar, and so on. Hence, traders look at the economic news, or what influences a currency pair when the news gets out, when the news hits the wires, and then has an educated guess or forms a guess about what the central bank will do next. Because in financial markets, no matter the product that you trade, the focus is on what the central bank will do next. As such, the Forex economic calendar, or the economic calendar that one should use on any financial product, binary options included, consists of economic news that are supposed to be released ahead of us. Namely, this is the forexfactory.com, but in reality just go and Google the economic calendar and you will find out that this is a free information offered by almost any broker out there, or simply to be found on the internet. And you have the economic data for the week ahead, but you can choose the economic data. For example, this one is from this week, and you can choose it either for this week, for the next week, or simply for today, for a single day, and so on. Let's assume that we stay with this week, and here we have the impact. This is the impact of any financial news that might hit the wires. This is the impact. There is a color code here. We have three colors. Any news that you see with the color red is the most important one. Namely, the market will really move when such an economic news hits the wires. Orange stands for so and so, not that important, and yellow, you can disregard the yellow news. Now, as I mentioned earlier, fundamental traders, what they do is they look at the important news ahead and try to focus on what the central bank will do at the next meeting. For example, let's assume that you trade the Australian dollar, US dollar, and you want to buy a call option on the Aussie, or your technical analysis points towards a higher value of the Australian dollar, US dollar, or the Aussie in general. The next thing to do is to scroll down and look only at the red events, because all the central banks meetings are represented with red events. So you look at the red events when the central bank in Australia, when the Reserve Bank of Australia will come and not change the rates, will come and set the monetary policy. Not this week. We go on the next week. We already know that on Monday, nothing important here, only the manufacturing PMI in the United Kingdom, the Great Britain pound is there, and then moving forward, on next Tuesday we see the cash rate or the RBA rate statement. Now that's important because if we want to trade a binary option and no matter the direction, and we expect for the Aussie pair to move aggressively from today, the 27th of June, until July the 4th, then we may calibrate our expectations because traders won't take a chance until next week. So you have two possibilities. Either you set the expiration date earlier than the actual news or way forward in time. Trade with end of week, trade with end of month, base your analysis on something else because on this period probably the Aussie won't want to move at all. Now after the cash rate, that's another story. Now let's come back to the economic news here and trying to make a bit of a guideline of this economic calendar. It all starts with the date. So this week started with Sunday 25th of June. You have the time when the news is released. You have this small green arrow that tells you all the time where you are with the current economic releases, and then you have the currency pair, the currency that is affected by the economic news, and of course, as I mentioned earlier, the time. Now this time is very important because we live in a world that is dominated by algo trading, or also known as supercomputers that buy thousands and thousands of trades per second or per millisecond. This is why you see when these red events are coming, this is why you see market making an aggressive spike high and an aggressive spike low, because the algos are programmed to buy and sell in a blink of an eye, right at the top of the hour here. For example, Fed Chair Yellen speaks today at 1 p.m. and the moment that she opens the mouth, the algos will interpret what the lady said, or what the lady just said, and the reaction will be aggressive on the market. And then you have, let's take an economic news here. Let's take the Bank of England Governor Carney. No, let's take the crude oil inventory. So if you trade the Canadian dollar, for example, you might know that, or you should know that the Canadian dollar is directly correlated with the oil price. Oil moves to the upside, Canadian dollar moves to the upside. Oil moves to the downside, Canadian dollar moves to the downside. This is normal because the Canadian economy is an energy-driven one. If you go on this box with the detail, open detail, you will find out everything you need to know about this economic release. Remember, what matters is the red news. The source, the Energy Information Administration. What it means, change in the number of barrels of crude oil, the classical interpretation. What's the usual effect on the market? It is the frequency of the release, when the next release will come, and so on and so on. Why traders care? It influences the price of petroleum products and so on. You have also a bit of history here. If you want to make an Excel chart to see the evolution of an economic news, like in this case the crude oil inventory, you have the last 6 months, the last six releases, sorry, but you can go with the last 12 releases, and you can even go with even more data in order to pick a trend. Long story short, the economic calendar here matters only for knowing when the central bank meets. You have 3 for the economic news, for the rest of the economic news, like it is this consumer confidence. You have 3 data to compare: the actual data, the forecast, and the previous. Now the forecast is a survey or a medium or an estimation based on what economists and research companies say about this data. And then the more the actual differs, the more the impact will be on the market. If the actual is way bigger than the forecast, and that is supposed to be positive for the currency, then your call option will definitely end up in profit. If not, the other way around. So traders will try to interpret based on what the economic news on every month show, try to interpret what the central bank will do next time. So out of all this economic news, the first or the number one news red event you should look for is when the central banks meet. So you simply go on the next week and look for when the central banks meet. If you want to trade the Aussie, or if you have an interest in trading the Aussie, you search for the cash rate or the RBA rate statement next Tuesday, July the 4th. In between, or you go back 1 month back, and then you go and take all the red events from Australia, namely unemployment rate, the GDP, the PMIs, the retail sales, and you see how did they come when compared with the estimations. They were better than expected, worse than expected, and you have an educated guess about what the RBA will do next when they meet next Tuesday. The same you go with any other central bank meeting that you might have. Next week we don't have any other central bank meeting. We have the non-farm payrolls in the United States, but it is exactly the same. You'd simply search for the next FOMC statement or meeting. It's on a Wednesday. And then you go back, or from this moment on until that Wednesday, you simply interpret the economic news. You look at, again, unemployment rate, ISM non-manufacturing, ISM manufacturing, you look at the GDP change, you look at durable goods orders, all these red events, and then you interpret them if they were better than expected or not. And then you'll have an educated guess or a fundamental guess about what the dollar in this case, because we talk about the FOMC statement, the dollar will do next. Now doing that and a technical analysis based on a chart or time frame plus a money management system like we discussed last time here, and you will have much better chances to survive in this financial world. Thank you for being here and have a great day. Bye bye.